on the competitiveness, what are the overlays or like how is one insurance company priced different than a competitor? Like where does that happen?
So you're asking me why are they different in pricing?
Correct. What is it? Is it just within the company? Do you guys like, for instance, I can go to three different lenders and submit the same file and I'll get three different interest rates.
Yes. Okay. Ours is based on finances. So it's based on the insurance company's finances is where you'll see your pricing. So for example, if a company's new to, then I'm talking way before this crisis came up. So let's say a company's brand new to California, right? And they want to sell insurance here. They may price very low to get into the market because their financial bucket that they need is small. So they're okay to price low and keep that bucket because the Department of Insurance isn't looking for a huge amount of money yet because they don't have a lot of exposure in California. So they can keep their prices low. But those are the companies sometimes financially, as they get bigger, you'll start to see their prices creep up because their bucket now needs to match their exposure. With that said, Andrew, then you have to look at their financial standing. Are they priced so low that they can't bear the exposure? The Department of Insurance regulates us as much as they can, but remember, it's still not 100% to exposure. It's still a percentage to exposure. So that's what you're looking for. That's how they're pricing it. It's just exposure. So State Farm has a big exposure in California. That's why we're the biggest, but it was also why we were able to maintain ourselves as one of the last companies to have to raise their rates because financially we were okay. We were maintaining, but we're also the biggest exposure. So we are the biggest dogs in the house here.
I thought you guys
Now,
stopped writing policies.
yeah, now we've stopped because we
Okay.
finally had to. But we
Got
finally had to because then now our exposure got way too big. Then we said, okay, now we have to stop. But we were one of the last ones to stop. And it was, if you notice, when we stopped was really when everything started moving. So when the small companies stop and leave, nobody realizes it. But when the big ones start to move and leave, and then when the biggest one starts, then you have to look back and go, what the hell is happening? And I think that's what happened. When the biggest one finally had to make some moves, then if financially they can't do it in California, how is everybody else going to manage? So that's when all of this kind of hit the fan and we all went back to the commission and said, here's what we need. And then he
And
said, okay, we get it. Yeah, we get it. Financially, this is not sustainable for anybody.
and so speaking on the pot of money, I blank
Yeah.
on the term you use. So using State Farm finally said the risk to reward for them is too high in California. And so when a California homeowner pays their insurance, does that insurance money stay only in California? So like the risk that you guys take in the 49 other states has no effect on what happens to a California homeowner or their policy costs.
No, California is a beast in its own. California State Farm is different, Texas State Farm is different, and Florida State Farm is different. And then you have the other 40 something that combine themselves. And it's because we are the three riskiest states. We're the hardest hit when it comes to any exposure. So we separate our finances so that we don't bankrupt everybody while we're
So
trying.
almost like
So
you have LLCs in place for those key states and
yeah,
they're
we
functioning
do.
on their own. Got it.
Yeah, we've
Okay.
got CEOs here. So, and Andrew, I want to tell you something. I think one of the things, it wasn't risk to reward as much as the exposure. We couldn't
Correct.
handle any more exposure because I think we're up to gigantic number of homes insured in California and the exposure. And honestly, because it's in the news, I'm not saying anything that is in the news. The state of California even said, State Farm, your exposure's getting here and your float's still here. So we need you to move your float. And we're like, we're not collecting enough premium against the dollar to move our money up anymore. So yeah, if there's a big disaster, we may not be able to pay out. So we're going to stop now so that now where we're at and where we're at here, we can pay out every claim that comes through. But if we had kept moving forward, they would have asked for more money and we weren't collecting enough premium because the amount of premium we collect is regulated by the state.
Right.
So it wasn't like we could just come in and say, I want to raise everybody $10,000 and we'll be okay. The state still has to approve it. And that process is now also being revamped because they realized that process was created 50 years ago and that process doesn't work now. So we're revamping that process also.
And additionally, for the exposure, if you go into let's pick I don't know, pick a new community in Temecula. It sounds like you're up in Temecula, that area. I don't know. There's probably a community there that's less than 10 years old, and
Mhm.
there could be 500 homes in that community. And the price ranges could be on the low side, let's say five or
Mhm.
600, and on the high side, 12 million. Those two policies, are they basically rated the same, but cost different based on the size of the property?
Yes, they're rated the same. All the discounts will be the same. All the ratings will be the same. It's just now what you're insuring it for. I think I understood your question.
Because the
Yes,
insurance is basically paying to get that homeowner.
back to zero.
So if
Exactly.
the cost to build a 4,000 square foot house on this piece of land is X dollars, let's call it
Hmm.
a million, and the other one's only five, that's in the same community, it's going to cost them less. So
Yes.
essentially the size of the house is probably it's going to be location, then the size of the house,
Yeah,
and
absolutely.
then
And
that are going to
quality.
change those policy prices.
Yes, and quality of what you put in the house. Because a lot of those $1 million homes have things in there that are different than a tract home would have in that same community. We have communities like that here, Crown Hill. You'll find some areas that are semi-custom, and then you'll find the tract areas. So Bear Creek is like that. You find some of the tract areas, and then you find the big custom homes in Bear Creek. So I get what you're saying, Andrew. Yeah, so the price would be different. I'll give you guys something that was shocking. I insured a house Summers Bend. Remember Summers Bend? When we were able to write in California about in 2019, I think Summers Bend was coming up around 19 or 18. I think I insured a house there for $600 a year.
Hmm.
Isn't that crazy? That I'm
Yes.
telling you, our rates have always been super. And that house, Andrew, the reason it was so low was because it was brand new. Like you were talking about, it had a lot of brand new credits.
A follow-up question on what you just
Yeah.
said. Now, speaking on the cost of the interior costs of rebuilding
Mhm.
a property, and going back to what Travis had asked about current homeowners, my house has been updated since we got our last insurance quote.
Okay.
Am I potentially underinsured?
Yes. It depends on what you upgraded. If you went from carpet to tile, yes, you might because what we put in your home when we started was carpet. So when we replace, we're going to replace at the carpeting price. Tiling price might be different because the install, the removal, and all of that is different than carpet. You should let your insurance agent know. Like I go through every 18 months, I call every one of my clients. And I ask them if you wanted us to review your policies, we will. If you don't, that's okay. Most of them say, yeah, let's review it. And then that's when you get into the what upgrades have you done to the home? The replumbing, the repiping, the new floors, the kitchen. I redid everything in my kitchen. I tore it all out and re-put all of the cabinets. Oh, did you upgrade the cabinets from what they were when you bought it as a tract house? No, yeah, I had them all custom made now. Great. That's a different price than the box that you buy from Home Depot. That's a $6,000 cabinet set. You put in a $30,000 cabinet set. Yeah.
So that's actually that's a really important piece to understand,
Mm-hmm.
because and especially tied to when we're going into escrow, everyone's just looking to get the cheapest thing they can sign.
Right.
Whatever they're doing, they're price shopping based on price. Like what gets me this fat, and then they don't, and then they just assume that they're covered. And it's with car insurance, which is more common. But those are things, anything that's insurance related, there's no vanity benefit to it. I'm just paying it out. So it's always, I want it as low as possible. And so it's interesting to hear that based on an upgrade to a property, like why you might want to do that and how those things could affect it. Now, one more question. I know you're dragging on. So tell me, with the way you described all those things that you do personally or that you're looking into, tell me, are insurance agents built the same? Are you guys all the same, or do I need a good one? And
You,
what would change that for me if I so I know what I'm looking for?
this was not a sales about me, so I apologize about that. But it is important because I think you shop your lenders the same way. I
Sure.
think it's somebody who is active, actively looking at what you're doing, at your file, at your policies, at your lifestyle. Somebody who is easily communicated to. Like you can talk to them. They call you every couple of years to see how everything's going. You have good lenders and bad lenders, the same idea. So I would say if you're shopping for an insurance agent, make sure they're asking you the questions to fit your lifestyle. And I always say, I want to understand how you understand insurance because that's the only way I can help you. I am a big believer in high deductibles, low payments, right? Because I can save $5,000. It's going to suck if I have to pay it out. But if I can save it monthly, the lifetime of an insurance claim is what, every 30 something years? How many of you have never filed an insurance claim on your home?
Yeah, no,
So
totally true.
if you can do a $5,000 deductible, 30 years down the line, you will have saved 5 grand. It's an irritation to pay it out. It's not an act, you know what I mean? So I'm a big believer in that. But I do have some clients where they're paycheck to paycheck, they barely got into their house. And if that water heater breaks, it's going to devastate them financially. So now I've got to look at them and have a conversation about low deductibles, but that affects the premium. The premium goes higher. But if you want a 500 or $1,000 deductible, your premium's going to be a couple of $100 more a year than if you do this. So we look at that. And then sometimes I also look at where they are in life. If they've been clients of mine for a long time, like you guys, if they're a person who's coming back for a refinance, that might be a different conversation than where they were 10 years ago, right? When they first did that loan with you, they're 10 years older, they're financially different. That refinance conversation is probably different. And that's the same with us. We grow with them. So the conversation every couple of years might be different. And
Right.
that's what you want to look for. You want to look for somebody who does that, who grows with you. But then again, you're right, Andrew. Some people will just put out a request to all the lenders, and the lender that comes back with the least amount, and you're looking at that going, ooh, that's going to hurt later. But there's nothing you can do. Whereas if you have the actual conversation, you can explain to them why the difference. So that's the same thing with me. If I see a low price, I'm like, oh, that's going to hurt later. If they're willing to sit down with me, I can show them why, what the differences could be. So that's it. So yes, it's not that your insurance agent's anything. We're not all built the same, just like lenders aren't. We do it differently. I've been doing it for 24 years and I've seen the worst of it for my clients. And I try very hard not to put them in that situation knowingly. Like I can only give them the advice and they can take it or not, which is fine with me. But I've seen the devastation and I cry for them. And so when they come to me, I'm just like, now, so what decisions do we need to make differently? And that's how that, but that's just, I think every agent is like that. I would hope. Yeah.
Yeah, and then one last question
Yeah.
on, let's say, I guess, policy amounts or payout amounts. So with car insurance, and I don't know how to ask this to you in home insurance, but in car insurance, they'll offer you the typical, and as realtors get this too, they always require the 100 and $300 100, 300K
Yep.
policy based on the types of accidents you might have. And clearly there's a lot more car accidents than claims on homes. But there is, let's say that person, and based on their scenario, they pay $300 a month for the top tier, which would be like 300, covering their car and any damages caused. And that's the $300 a month charge. But but they can generally ask and go to 500 or even 1 million for a very small fee of maybe only 15 or $20 more a month. Is there options like that, like where you can overprotect yourself with homeowners insurance?
Yeah, not necessarily in the dwelling, but yes, in the dwelling too, because in the beginning I said that we do this exact way and we tell you how much you need to be at the minimum insured for in your house. And I have
Hmm.
clients that say I want a little bit more. So yes, you could to make if it feels better to you. Your liability on your homeowners, you can also move from 3 to 500,000. You can buy an umbrella policy. So yeah, you can do the same thing for very minimal money. Yeah, you can. I'll tell you nowadays, though, liability lawsuits are up. If you talk to any personal injury attorney, liability, yeah, it is up. So that's another reason why you're starting to see a climb in liability insurance premiums. It's moving up a little bit because lawsuits are up and payouts are up.
Yeah, and I use specifically my insurance, my auto insurance right now is we're at a 500,000, and it's based on feedback from the lawyers that I've worked with because of the accidents I've been in. They all simply say, look, we can only help you if you have coverage. And you cover, and what a lot of people don't understand about insurance, and I think this helps, this might be good for everyone on the call, but the insurance is not to protect you. It's not like you're not buying the service to have them represent you. You're buying it to protect yourself. When there's a claim, it's not them on your side. We are two different sides. I've paid you for this protection, and now I need you to pay me because something bad happened. And that was eye-opening for me. And the insurance company figures out all that stuff. So it's really interesting how this goes. But we pay more in car insurance than we do for homeowners insurance. And our two cars
Yeah.
are 1% of our
Yeah.
property value, or to rebuild our house if it burned down.
Yeah, liability is up right now. Like I said, we're there. Good agents will ask you how much we need to protect because we are going to pay that out on liability. So if you have 300,000, we're going to sit in court with you up to 300,000. So because we want to protect our money too, we don't want to necessarily give it away to the other party, but we're there to protect what you own. So if you have big assets, make sure you cover those assets because you don't want to write that check to the other side also, just like we don't. That's why we sit in court with you as long as we do. If I could ever tell you some of the crazy things my clients have been sued for in an auto insurance, I'll just say one and you're going to laugh. I had a client where the other party, he hit the guy. Admittedly, we know we rear-ended the guy. The other guy sued for $1 million claiming impotent.
Oh man, that's the
$1 million, 3 years in court for us to fight that claim. And my client walked in laughing, going, "We won today." And I was like, "Oh, thank God," because I was dumb. I shouldn't even been in court for 3 years. But it was impotence of all things.
so interesting. We've moved a little bit off, but I do have
Sorry.
a question on if you're renting your house. We haven't talked anything about that. How is homeowners insurance affected if you have a renter in there? Because a lot of my buyers right now, or my clients right now, are moving from their primary, renting it and purchasing a second one. And so the house they just left, they're not updating their insurance.
No, you have to. If you are not updating your insurance, you are going to get denied because you have to move from a homeowner's policy to a rental dwelling or landlord policy. People call them different things, but they're rental dwelling policies. And if you have a claim and the insurance agent or the adjuster goes out there and realizes they're renters that live there and not the homeowners, you're going to get that denied. It's a
Very
completely different
interesting.
policy.
So what you're saying is it's in the owner's best interest to self-update that policy.
Absolutely. The other thing is rental dwelling policies offer loss of rents. So when that policyholder has to move out because there was a big loss, you don't owe them to move somewhere else, but we owe you rent money because obviously they might not be paying you rent money.
Well, that's
So
interesting.
yeah,
Is that
that's
a common part of the policy, or is
uh-huh.
that something that you guys offer?
No, it is a common part of the policy, loss of income.
Great. All right. Sounds like I've taken up too much time.
No, not at all.
No, this is
Seeing Paul come back on.
this is all great education, and Andrew, those are very good, valid questions that you
Yeah.
asked. And Julie, additional education. I think this is all great. Time is running out, but I just want to thank everybody for all their input. And Julie, you have no idea. Once again, that was a huge education for all of us, and we're gonna definitely make sure the rest of us learn from.